read the title. In order to elevate as a trader, to reach the pinnacle of trading performance, in today's video, I will do just that. All right, so you're probably thinking, what is your reason for doing this? You know, like why are you doing this? You know, like a lot of people are gonna be questioning why you would backtest over 1,000 trades. You know, like 100 is good enough, or 1 month of trading backtesting is good enough. But for me, the reason I'm doing this is I need more data collected, and I want to ingrain the model / my checklist into the subconscious mind. So on FX Replay, they have that little checklist, check off every single piece of confluence, and that's what I'm usually doing whenever I'm backtesting. Whenever I'm backtesting, I'm going through every single step of my checklist before I take the trade, and then I put the confidence level, you know, from 5 stars to 1 stars, and I take the trade. And it's simple as that. Majority of the time, whenever I'm having higher confidence on a trade, and I know it's following the checklist to the tick, I win. But if I have that confidence level and it's there, but it's not really following it, I lose. That stems from what? Not following the checklist. So again, that's why they're there. Certain traits, you know, you'll lose either way, you know, but it is what it is. As long as you're learning, you're data collecting, and you're understanding the probabilities are in your favor. I also need more confidence, trusting myself when I'm trading. So I'm going to collect data to build that confidence. And that's one thing I'm lacking right now is confidence. So wouldn't be able to hold the trades. We weren't doing this and that, you know what I'm saying? And right now I'm about to just create a sample size, and I'm about to risk, you know, 1%, treat it like it's a combine here. I showed it a photo of what we were backtesting before, you know, the previous session, 33 trades, and you know, we're using the model trading in queue. So this is going to be the middle segment. This is going to be like every other 10 trades. I'm going to update you guys basically how it's going, what we're looking for, how we're trading, you know, the win to loss ratio. Every session though is going to be a little different. I'd rather trade the indices though, because that's basically what I'm trading. I'm trading futures, so it makes no sense trying to trade EU and GU, like, or commodities, this and that. But I'm gonna incorporate it, see if it works. Again, let's update you guys really here. I think that should be good enough here. All right, but all right, so basically we took a trade here on EU, and we won this trade. We're currently on trade number 9. We are journaling majority of the trades here. We have not yet to journal that one, so this one is going to be a W. We did have certain trades where we lost. So the anything green, we hit a 1R and we moved stops to break even. We might have hit break even here, as you can see. This one hit break even, but if we were aiming for a 1-to-1, we would have got it, which majority of the time we kind of are aiming for 1-to-1, but now we're aiming for 1-to-2. Before I was just aiming for a 1-to-1. Here we would have aimed for 1-to-1, got it. This one we aimed for a 1-to-1 break even, and we got it, and then eventually we hit a 2R. And currently we're at a loss of 184 on the account balance. So as you can see, the losses are eating us up right now. For this month right here, September, we are getting beat up. We're just you know, we're getting beat up. We took our win, our first W. Second one we took a loss. Third one we took a loss. Fourth one loss. Fifth one loss. And again, really the only reason I'm losing here is, like, if we go over the trades, which I will do, I'll do another update as to why we're losing. I'll review the trades, and then we'll go on to the next session. The data sets that we have collected, we're going to review the trades, take notes on a little, you know, notepad we have here. That's pretty much really it. We're not really going over taking too many trades. Again, we're only trading from 8 to 12 New York time. That time window for Forex is kind of where I'm looking for a majority of my trades. Fine, honestly, it's a rough start, but we're gonna, again, just the reason I'm doing this is to build the confidence, to build the data collection, to understand how to improve as a trader. The only way you're going to be able to do that is if you're continuing to grow and learn. So that's pretty much really it. So let's pull up the stats here. The stats are not looking too good. Minus 4% almost. We're down around, but we brought it back up, and we're just hovering around 2%. 12 wins, 15 losses. We're close to that 50% win rate. The most unprofitable day is Tuesday, of course, and October was a red month. Currently for November, we had 4 break evens for 1R, so that could have mitigated. Well, this did mitigate that right there. And these could have, of course, been winners, but we again moved stops to break even at 1R. We're aiming for 2R. Just 1 trade a day average. Trades a week, we only get 2.5, and then trades a month, 9 trades a month. So that just goes to show, you know, like, we should be trading at least twice a week, maybe 3 times a week. My strategy only shows itself like 3 times a week, so, well, 2.5 average, but only 9 trades a month. So that just goes to show that we should not be trading more than 3 times a week, live trading, of course. And yeah, that's pretty much the stats. Once more, we're journaling these, and after we're done, bro, we're gonna like categorize them, because I used AI and I was like, all right, what can I do to learn from my losses? And AI was just telling me categorize them, try to understand what you were doing wrong, you know, from a deeper level, deeper perspective. Like when you were losing, you know, like, was it the entry model? Was it, you know, like the confirmation? Was it the narrative? Like, what type of losses were you taking? What market conditions? All these important things, you know, and I think that's kind of what we need to do whenever we're like reviewing the losses, because I do plan on reviewing the losses. But I mean, we can look into it again, the stops, the stop loss placement, the position placement basically,
and like what days of the week am I losing more, and
here we're trading on trade 33 right now. I'm gonna cue a montage real quick of me like doing it with the template, but let me talk about this real quick. So right here we have our G7 trading model. So this is one model. This is gonna be bizarre, but I am finding another trading model that I've been resonating with a little bit more. ICT discretionary views, but more of a continuation with displacement and looking for your clear and obvious draw on liquidity. And we're backtesting that right now. So we're gonna backtest 750 of the G7 trading model, and then we're gonna backtest 250 for the G7 continuation model. After every 50 trades, review, analyze, learn, implement new lessons. Right now we're on trade 33 for this one, and then the other one we're just about to start. I'm about to start it on my laptop. Continuations, and that's it on NQ for 1 month of data. I'm gonna restart it and then eventually go back for this whole year and do like a whole year of continuations. So yeah, we're gonna have to backtest 250 trades. I want to be for that one. I want to have majority of them on futures. This one I could care less if it's on. Here's the setup. We're about to backtest here, and then eventually I'm gonna write down what I'm looking for, or after I'm done like backtesting for this month of February.
all right, as you can see here, this was using the G7 continuation model. We had basically a 0.1 month of February. This was the backtested session. 7 wins, 8 losses, really aiming for a 1-to-1, and that's pretty much really it. We need to pick our days better. That's really it. Picking our days better. We traded almost every day, except for 2 days of the month, bro. Understanding when price action is good and when it's not good is probably one thing I need to really focus on. You can see NFP week, this one we're not really doing too bad. If I'm being truly honest, the G7 trading model was not really bad. Again, we're moving stop loss to break even at a 1-to-1. If we mitigated majority of the losses here with a 1-to-1, or not moving the stops to break even and just cutting it at 1-to-1, been mitigating the losses, if we would have not aimed for that 1-to-2. But we're doing pretty well, bringing ourselves back up. Again, just reviewing the losses. October was a red month, but again, here we don't really trade as much, which is kind of like what I want to do for both. I want to combine a little bit of both, not take as many trades, but also wait for strong confirmation, refine the system a little bit more, or refine what we're looking for and what to avoid, and use certain patterns to like prevent certain losses. What happens if I see one model playing out and the other one also too, and like they're contradicting each other? So like there's certain scenarios like that where I'm like, maybe I shouldn't trade, maybe I should be on the sidelines for those days. Or all right guys, so I don't know if I showed you the statistics, but here's a little update. We are currently on trade 45 for the we have a 46% win rate, average RR 1-to-2, max 1-to-2, or average RR 1-to-1, and then eventually a max RR of 1-to-2. I'm usually aiming for a 1-to-2 majority of the time of my trades. I was moving the stops to break even, just a little bit in profit, but now we just simply moved it to completely break even, to take those break even moments at a 1-to-1. Really nice, honestly. We are trying to increase this right here. We're trying to increase the win rate, and this is another thing too. Whenever I'm going to approach prop firms after this 1,000 trades, don't plan on risking the same amount per trade idea, and I don't even plan on risking like 1% on the evaluation, unless we're like blow like 5 evaluations in one day, or like in a week or something, like back to back, which I doubt, because look, if we look at the model, how many times does it present itself per week? We have a average of 2.65, and if we increase the win rate and we're extra picky with the setups, that means we're only going to find really one good setup per week. As for the other model though, the G7 continuation model, we have basically found a setup every day, but we weren't winning every day. We basically hit break even by the end of the session. After like 100 trades, that's kind of where I'll finish this session off. At 100 trades, I want to have at least a 60% win rate. I could care less about how much we make, or the percentage of total P&L and all that. I could really care less. I could care less about anything else. November here, we had 2 winning days back to back. Break evens though, 1, 2, 3 right there without the loss included. But right now, what are we doing to improve the system? We're reviewing it right now. We're on Notion. We're reviewing it. We're creating certain things. What are we doing though? We're having the G7 model. Is it followed? Are we following the criteria? Are we following the checklist? Are we having a narrative, PDRA, CRT, whatever, and then the confirmation time frame? We're having a SMT. Are we having another CRT? Are we having a PD array being tapped up into? And then eventually the entry time frame. What entry model are we using? Are we using the IFEG, change in state of delivery, a breaker, like what? We're using an order block breaker. Are we using like an inversion for value gap? We're using the 22 model. Like what are we using, Right now I'm about to add another thing, which is what PD array were we using on the narrative time frame. I want to dive more deep into this, like what confluences, narrative confluences, like are we having a CRT on the daily? Are we having a 4-hour confluence or 1-hour confluence? Are we having a 4-hour and a 1-hour confluence? Like what? Same thing with the confirmation time frame. Same thing with the entry model. Like one entry model are we having that's always hitting, bro?
All right, so I'm currently on my deep work session right now. We did a 45-minute work session. We reviewed majority of the trades. We're at trade 24 right now. Let me show you guys. We're at trade 24. We're going through every single trade. We're marking down, like the G7 model, was it followed? Check mark. Entry model, what entry model did we have? Was it a CRT or was it a change in the state of delivery? SMT, was there any SMT present? If there's no SMT, we don't take the trade. Why? Because it's not following the checklist. We need 2 out of 3. We need a CRT or SMT. And as of recently, what I noticed is that majority of the time with the confirmation time frame, I don't have an internal array. So I'm just going to use SMT as the 2 out of 3. If we have an internal array, if we have 3 out of 3, that makes it more than the most like high probability setup we can take. And then it doesn't also have to be an internal. That's what I noticed. Like the 1 minute through the 5 minute, like those lower time frames doesn't have to be through that. It doesn't matter if we have a 1-hour confluence, but majority of the time whenever we are winning with strong displacement is with a 4-hour confluence. Another thing I'm noticing. And then we also have SMT. Again, very, very, very common inside the winning trades. The winning trades, again, what do we have? SMT, 30-minute CRTs, and then actually 4-hour and then the 1-hour confluences. We still have, like, let me calculate real quick. So we have only taken around 45 trades on the G7 model, which is going to be my main model. The G7 and continuation model is more about a discretionary approach, improving my discretionary skills of reading the market. That's kind of another thing. I don't really plan on making that like a real model. You know what I'm saying? Like I still want to like build upon it and like refine it and make it really good, but doing the continuation model just to build my discretionary skill, being a mechanical trader, and I don't want to have that, like type of approach. Still build my discretionary skill, and I don't want to be like just following a pattern. Again, I'm really against mechanical trading. I like having a discretionary approach because again, like not every condition in the market is going to be high probability, and if you're discretionary, you're gonna if you're a discretionary trader, you're gonna be able to distinguish high probability days versus low probability days and all that. And I want to apply that to my system too. You know what I'm saying?
All right, guys. So it's been a couple of days, but I finished reviewing every single trade that we have taken on the model G7, and we have currently created the backtesting session 6 right there. We're about to finish up round 5 and then eventually go on to round 6. We're currently on trade 46. Continuation model, we have backtested around 40 trades. So this one is again a little bit more about the discretionary view for this session 5 right here. And you can see it's pretty much the same. We have a 46% win rate with a max RR 1 to 2. The average should be 1 to 2, but again, we weren't really moving the break evens until later on in the session. Sometimes we didn't even have an entry model being presented, as you can see here, or like we weren't really having the confirmation time frame align with the entry model. And then some of these we just didn't have SMT when we did have an entry model, so we just didn't have any SMT. We were still winning, no SMT. We were just having a hot losing streak here. What I mean by that is majority of the time whenever we have like a 1 hour or 1 hour internal array, we usually, you can see it's a loss. Here we didn't even have one. Here we had a daily and 1 hour. 1 hour one did work out there, but what do we have? 30-minute CRT there. Usually the 30-minute CRT is kind of more high probability than again 1 hour. We barely won the G7 continuation model. This was the first session right here. You can see we just had a break-even model trading month right here for the month of February. We traded way too much. Again, trading way too much, too many trades every single day, except for 2 days we didn't take a trade. And again, same thing with this one. We took a trade almost every single month, every day, I mean, except for 3 days of the month, for the month of March. So again, this one was a lot better. We were up around 5.74 average R, 1 to 3, 9 wins, 6 losses. Again, best win 2%, 1 loss, or the 6 losses of 1%. And yeah, the trades pretty much moved to speed. So as soon as you enter, if you don't, not in the right direction, you get punished. And then eventually here is the current session we're on right now. I had to take a little break since we took a loss and a break even. We took 3 break evens. All right, guys, so we basically finished backtesting over 50 trades. It's not the best. We're only up 3%. close to 6%. We were at 5% here. Remember, it was a really good month, 2024, which we're currently in. It's not a bad start. We're still up 1R. An L, we took a W the last couple of trades, but overall, following the system, we are starting to see better results, and again, this market, I don't trade EU and GU. If I'm being truly transparent, you can see the results differ from different markets, and that's kind of why it's important to build that conviction trading the market in, low probability markets or low probability conditions, and high probability markets and high probability conditions, because you're able to distinguish what works, what doesn't work, when to trade, when not to trade. So for the last couple of trades, we took 1L, so minus 1R. And again, this one was, I think, a full TP. So yeah, it was a full TP there. So we got 2R there. So we're up 1R. And then we had another one where it was full TP. You can see that there, another 2R. So that's 3R. And then this one we took an L minus 1R. And then we had a break even trade. So we're up around 4R minus 2. So we're up 2R. Break even here. That would have been, if we took the partial or if we took the W on 1R before I take a trade, is this a good trade? I'll go over every single time frame. I haven't really been doing that. If I won't lie, before I was trading, I wasn't really doing it. Now I really am doing it. Going through each time frame, really distinguishing if this setup is really worth it. And I've saved myself from plenty of losses as of recently, like just right now, this session, saved myself from like 2 losses already. And I just simply skip through the candles, boom, boom, boom. But again, there's another reason, or there's another factor too, that I miss out on some winners. I missed out on 2 winners, and I missed out on 2 losses. So we would basically been at the same results here. But asking, is this a good trade? Would I really take this? And if I second guess myself and I start doubting myself, like, I don't think I would take this, or, I don't like this type of confluence here with this type of, condition here, blah, blah, blah. There's only one way to find out. Either you take it or you don't take it. And eventually I took that trade and I kind of regretted it.
So yeah, the original video was going to be backtesting 1,000 trades, but I realized that was way too much. I was probably not going to live trade for the next month or 2 if I was going to do that. So in order for me to live trade and gain more insights, because I feel like you gain more insights when you're live trading, because the psychology, the mental factors, all those things come into place. But backtesting does help. Backtesting, you understand what you're doing wrong, what you're doing right, what to avoid, what works, what doesn't work. I've come to the conclusion, I refined my system, backtested again, the new session, as you'll see later on in the video, we came back stronger than ever. The results were better. One thing I want to say in the video, which you will see, is EU and GU session 5 and 6. The results weren't really the best, and I will tell you guys that the market conditions on EU and GU, you go to the daily time frame during 2024 slash last 3 months of 2023 to 2024, first 2 months, it just wasn't high probability, if I'm being truly honest. The market was very, very range bound, very choppy. In between 2 daily fair value gaps, I was just trying to trade that. I won't lie, I wouldn't trade that if I was trading Forex, if I'm being truly honest. I would find another pair, another market to trade, or I would just go to a different asset class. There's different trades you can take as opposed to NQ and ES. My win rate is very, very much higher with a higher RR, while EU and GU, my win rate is very lower with a good same RR. Will be a better video, I promise you, but we will continue this series. I will continue to try backtest 1,000 trades, journaling them, analyzing them, using the continuation model. I'm not gonna have a continuation model. I'm gonna continue trading my model, but I'll probably demo trade the continuation model, try to get really good on it on paper, just continue backtesting it, building my discretion. I want to build my discretion to that point where I'm able to review and analyze the market and see things that I'm supposed to see from all the concepts and all the ICT videos I've watched. But as for right now, the most reassurance I have whenever I take a trade is following the G7 trading model, the V2. We created a version 2 because version 1 was good, but version 2 is by far better. It gives us a higher probability, and again, it only presents itself twice a week. So we're gonna have to be only taking 2 trades a week, maximum 4 trades a week. So 4 trades a week max, 2 trades a week. We're gonna start next week with another video, and that's gonna be trying to pass a prop firm challenge. So if you're ready for that, comment down below what was your favorite part, and yeah, see you guys next week.
All right, guys, so this is gonna be the ending of the video. We're gonna end the backtesting session here. We've backtested over 100 and something trades. So I added up every other session that I've been backtesting, basically session 3, session 2, and we got around 142 trades with the continuation combined in there with the G7 or G7 model, yeah. And then we created a version 2. We backtested that last night, and we're gonna show you the results right here. So we did last month to this month, and we still haven't finished it, but we basically called it, and it was very, very profitable. We had a 70% win rate, 1 to 7 to 4, honestly, 4 break evens, and then eventually we had a 1 to 1 RR, max to 7, ideal average 5, max 14. So Again, if we're aiming for 1 to 2, we can probably hit it. We have to filter out the high quality setups and knowing what we're looking for. And I'm able to distinguish that now. And I was putting on more risk. You can see the biggest one was 3.4. And how are you how are you hitting a 3.4 if your average R is 1 to 1 and the max is 1 to 7.6? And the reason was because I risked more. I risk more simply due to the fact that on certain trades, I saw higher quality conviction on those certain trades. Like this one right here, this was a trailed stop loss. We were up almost 2R. We were aiming for 3 on this one. That was really it. 2 trades per week, 1 trade a day, 7 trades a month, honestly. Of course, we're not always gonna win. That's the thing. You're gonna lose at times, and it's simply just it's like that. Certain trades I lost, and I expected to win, but the market has other expectations at times, and that's kind of why it's important to just learn to walk away. It's important to just walk away, trade, see another day, continue to follow the system, because over time you will be more successful. But here is the G7 continuation 2 model. I never finished it. Again, I plan on finishing these off, video, off stream, whatever. And we refined the system. I removed the checklist. I even crumbled it up. Crumbled up the piece of paper and I threw it away already for the checklist because I refined it last night. And I added more little rules of what to do. So we're going to implement that. We're going to write down the new checklist and put it on a piece of paper right here. And I think a 60% win rate to 70% win rate is really, really good. It's ideal, really. It's ideal. As long as you're winning more than losing, that's all that matters. Overall, in the long run, you're going to continue on the upward trend. So yeah.
Stay tuned for the next video. We'll be scaling our capital using the data we have collected here.